Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 28th, 2025, and we're diving into Genesco's recently released earnings report for the second quarter of fiscal 2026. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Genesco's performance, especially given the interesting developments in their latest report.
Revenue and profitability overview. Let's start with the top line. Genesco reported net sales of $546 million for the second quarter, marking a 4% increase compared to the same period last year. John, what are your thoughts on this growth?
It's quite impressive, especially considering the retail environment. The 4% increase in comparable sales, with stores up 5% and e-commerce up 1%, shows that Genesco is effectively leveraging both physical and digital channels. The adjusted EPS of $1.04 also beat the forecast of $1.25, which is a positive sign for investors.
Segment performance and strategic initiatives. Genesco segments showed varied performance. Journeys saw a 9% increase in sales, while Shoe experienced a 4% decline. Can you elaborate on these results?
Absolutely. Journey's strong performance is a testament to Genesco's strategic focus on product elevation and brand positioning, which is resonating well with their target teen demographic. On the other hand, Shoe's decline is primarily due to increased promotional activity and competitive pressures in the UK market.
And what about Johnston & Murphy?
Johnston & Murphy managed a 1% increase, benefiting from price increases and lower markdowns. This segment is focusing on premium offerings, which seems to be paying off.
Operational efficiencies and future outlook. Despite the sales growth, Genesco's gross margin decreased by 100 basis points to 45.8%. What factors contributed to this?
The decrease in gross margin is mainly due to higher tariffs and promotional activities, particularly in the UK. However, Genesco has managed to offset some of these pressures through operational efficiencies and cost management.
Looking ahead, Genesco has raised its full-year sales outlook. What does this indicate about their future prospects?
Raising the sales outlook is a strong indicator of confidence in their strategic initiatives. The company is also maintaining its adjusted EPS guidance of $1.30 to $1.70, which suggests they are optimistic about navigating the current challenges and capitalizing on growth opportunities.
Key takeaways. In summary, Genesco has delivered a solid performance this quarter, with notable growth in net sales and a positive outlook for the rest of the year. John, any final thoughts on Genesco as an investment?
Genesco's ability to exceed expectations and raise its sales outlook is encouraging. Investors should keep an eye on how they manage external pressures like tariffs and competitive dynamics, but overall, the company is on a promising path.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Genesco's performance in the comments below.